Happy Friday, fellas. As usual, how's it going? Steven, right before we hit go live, you told me some very interesting news, and we should share it with the world. The world needs to know this.
Yeah, absolutely. So I am most people don't know this, or maybe you do, but I am one of two managing partners of Vibes Capital Management. This is a proprietary, alpha-driven, vibes-based investment fund. Really market-leading stuff here that I run with BitPain on Twitter. He's the other partner. And we're going to be launching a Vibes Capital Management merch line coming soon. So I know a lot of people have supported us over the years in quantifying market-leading vibes-based investment signals. And there's going to be some exciting stuff coming soon. Obviously, tank tops. These are going to be heavily like
the best tank tops in the entire world. You've never seen tank tops like this before.
Exactly. And it's realizing that it's like, we're short Patagonia vests and long tank tops. And this is where the alpha is in changing market conditions.
I will be a buyer, not an investor. It's not for me. It's not business for me, but I will be a buyer. I've watched too much Shark Tank. So welcome to the Swan Signal Live, everybody. We rug pulled you on Ben Workman. No, I'm just kidding. He's doing a very important call in a very important world that he lives in, doing leverage Bitcoin equities and raising money and all that good stuff. So he will join us as soon as possible. His call's running over just a little bit. And when he joins us, we'll dive right into the big news from MSTR yesterday. They had their shareholder call. It was an epic 2 hours. Saylor held court with the 80 slide investment deck with all kinds of data and charts and everything. And Ben is here to break it all down for you guys. Thanks so much to Mara for helping to support the show and securing the Bitcoin network. And thank you as well to BTC in DC, which is going to be an incredible conference at the Kennedy Center in Washington, DC this fall. You can check it out at btcindc.com. Swan is a general partner there, and we're helping to put it all together. So we're excited about that. All right, John, you were on the Schwab network this morning. I thought we might as well just kick this off with a clip from the Schwab network, and then we'll dive into macro and markets.
Let's do it. Yeah, my biggest takeaway from doing these appearances is that I cannot believe I used to wear a suit when I worked at Goldman every day for years and years and years on end. I put on a suit now and I'm just like, how did I do this for so long? So yeah, it takes me back when I throw the suit on.
Bitcoin is freedom money. It's freedom from having to wear 1960s clothing. Okay.
And pretty soon I'll be wearing VCM clothing. That's Vibes Capital Management. There's right. So many variations on that, by the way. You guys know the term LDI, liability driven investing, vibes driven investing. Like there's going to be a long list of variations you can use.
I'm going to need you as an advisor on the clothing line. we got shares. You got shares.
All right. Awesome. Okay, let's run this clip.
Mark, once again, John Haar is with us, Managing Director, Swan Bitcoin. Thank you for being here. So why do you think people are back into Bitcoin? It wasn't that long ago it dropped below 80,000, just for a moment, but it has held in the volatility. But why are people back to Bitcoin?
Yeah, so great to be here in person. I think for a few reasons. I think Bitcoin is being treated more so like gold than like a tech stock. Historically, people said, oh, it's just a highly correlated tech stock. It moves like the NASDAQ, maybe even with more beta than the NASDAQ. If the NASDAQ's down 5%, Bitcoin's going to be down 10 or more percent. That's the historic price moves we've seen of Bitcoin. That has definitely changed in the last year or so. And I would say particularly this year, we've seen it behave much more like gold. You quoted some of the recent price performance for Bitcoin. We're now exactly 1 month since April 2nd, which was the Liberation Day tariff announcements. If you look at the 1 month returns, Bitcoin's up over 10%.
Yeah, 1 month, 13.5%.
There you go. Yeah, so significant outperformance versus stocks in general, versus the high-flying tech stocks. So I think it's treating.
Yeah, good stuff, John. We've got Ben in the house. All right, Ben made it. Welcome to the show.
Better late than never. You know, when you've got these Vibe Capital board meetings that you guys are hosting out here, it's important to make it, even if you got to be late. So
Well, I mean,
thanks for waiting for me, guys.
you've seen firsthand the like enormous alpha that proprietary vibes-driven investment strategies can bring to shareholder value. So I just appreciate you coming on.
You've got my attention. I mean, I don't know exactly how we're going to frame vibes investing, but I'm on board. I like it.
Awesome, John. Any follow up on the clip there, and what do you want to get into on macro and markets this week, and then we'll dive into the main event of this episode, the MSTR call from yesterday.
Yeah, for sure. And I did get to talk about MSTR a little bit with the Schwab network folks, just because obviously it was a big deal. It caught their attention with the earnings call last night, and they're doubling down literally of their strategy. But yeah, I would say, for the astute listeners of this show, of Swan Signal Live, like we get into more detail than a 5-minute segment of, that I'm going to do on the Schwab network. You have to keep it higher level, so you just kind of hit those points. So, keep that in mind. But I wanted to get that message out that gets to a different audience. So I think there's some value there. And
Schwab invites you on, and 3 hours later, you're trashing them on a podcast.
No, I didn't want to come.
It's not trashing.
If I get into the gory detail of some macro topic or some Bitcoin debate going on, they're going to be like, "What is this guy talking about?" So you kind of just need to keep it focused on how are investors looking at Bitcoin. They did ask for a price prediction. I said 250 to 250K by the end of the year. And the one point I did hit, which I think it bears repeating in really any format, is this idea of the outlook for US tech stocks versus the outlook for Bitcoin. And historically speaking, we're talking about two assets that have been correlated. And right now, I feel like on a relative basis, the outlook for Bitcoin is so much more favorable than the outlook for US tech stocks. I don't think NVIDIA and all the Mag 7 are going anywhere anytime soon. I'm not forecasting them to disappear or go bankrupt, but their valuations have been really priced to perfection. This trade war stuff is going to weigh on them to some extent, I think, for months into the future. So just relatively speaking, I feel like now is a time where I would feel way more comfortable owning Bitcoin than the tech stocks. And I feel like that is a message that plays well with the kind of broad investor that might be watching the Schwab network. So that was the idea. I just wanted to keep it kind of higher level. We'll see how that plays out. But I would say, Bitcoin outperforms tech stocks this year for sure, in my view.
I think that's such a real thing that investors are considering. So first of all, you kind of landed this point already, but Bitcoin has outperformed tech stocks this year. Let's be clear. It's not just that it will. It already has. It just has to continue doing that. And, why is that? Well, Bitcoin doesn't have any tariffs. Bitcoin doesn't, get hurt from this trade war stuff outside of just like broad liquidity driven, giant sell-offs and things. It's not impacted. And when you're seeing these kind of big macroeconomic, even monetary order pressures and changes, that's not great for equity valuations because US assets are kind of priced at a premium based on kind of dollar recycling and foreign capital flows. All the other countries with their dollar surpluses have to take that money and buy dollar assets. And if that changes, even if these businesses keep growing, and they will, they're great businesses. I believe they'll continue to generate earnings growth and all of these other things. But the valuations could compress by, even a moderate amount would bring the shares down significantly. And Bitcoin just doesn't have that. It doesn't have that risk. And actually, you can make the argument that it would benefit from some of those scenarios.
Yeah, absolutely agree with all of that. I mean, investors are looking at where they can go to become uncorrelated to all the stuff that's happening in the markets today, right? All this talk about tariffs, all this global interaction that's happening, it's really putting investors on edge because you're only ever one press release, one video conference with someone important away from the entire market reversal. you get into these periods where things start to feel stable again, but you know that waiting in the wings is some type of an announcement or some update on the tariff situation or the US versus China that can just shake the core of the markets. And Bitcoin's proven incredibly resilient in that respect. And particularly, I mean, Saylor even highlighted this yesterday, and he loves to throw up those slides where you start to focus on what the companies that are investing in Bitcoin are doing relative to the broader markets. And they're beating them by wide margins. I mean, he showed 12 months, he showed 3 months, right? Through all these cycles, the things that have had a core alignment to Bitcoin, which has no counterparty risk, have been just amazing outperformers. So I think the rest of the market is waking up to this. And I think you're starting to see that as you watch the price of Bitcoin now start to climb higher and higher, even while people are continuing to talk about all this macro uncertainty and sector related risks that still exist out there in the market. Bitcoin just marches on.
Yeah, it's let me pull something up real quick. I've been doing this comparison throughout this whole period. So when the S&P 500 hit its current level, like the first time, let me see what Bitcoin was at. It was around September 18th. And so when S&P hit this level the first time, Bitcoin was at 60,000. So the last time when the S&P got to where we are right now, originally on an all-time high break, Bitcoin was at 60,000. We're now at 97,000. That's how much territory Bitcoin has gained relative to the S&P since this time frame. And that tells you everything. You have been much better off owning Bitcoin.
Yeah, and there's another chart that's been circulating similar to the point Stephen has made, which is just Bitcoin relative to QQQ, to the NASDAQ. And I believe that hit an all-time high. So yeah, just, relatively speaking, Bitcoin is outperforming the US tech stocks, which is a big deal because those have been the best performing asset class for really the last 20 years. So you really can't ignore that. And I think traditional investors, can only ignore it for so long. I think they have to kind of acknowledge what's been happening there.
Well, performance breeds interest, right? And so when you're watching a market like this that's just been riddled with uncertainty and you keep seeing these blips of green coming from Bitcoin and coming from Bitcoin related equities, you eventually just can't keep ignoring them, right? They eventually have to work their way into your portfolio because you are starting to see them, I'll say the word that no one likes to say a lot, decouple from some of the other traditional equities and the indices that are out there. So, the longer that this trend continues, and I think most of us are of the mindset that Bitcoin has a really long growth path ahead of it here, and probably a very rapid one, given the types of capital we see entering this market and the types of products that the corporations are issuing into the market. I mean, that's one of the most underrated drivers of Bitcoin performance, I think, is the fact that you can take a corporate balance sheet, you can securitize around Bitcoin, and you can bring all this outside capital that would never make its way into Bitcoin, and you can just load it up and bring it into the Bitcoin ecosystem and show the benefits of the unique characteristics that Bitcoin brings to the markets, right? Through that volatility profile that everybody used to focus on stripping out of their equities. And now you're finding not only is it a benefit, it attracts massive liquidity and massive capital into your equity and all the securities that you're able to offer. It's an entire new way to operate as a company. And when you can meet the incentive structures of Wall Street and the types of capital and the types of returns they're trying to generate using all their different unique trading strategies, if you can create all the instruments that tailor to that audience, I think it would be a big, big mistake to underestimate Bitcoin in the way it's going to perform throughout the rest of this year.
And I think that's the moment, that's the juncture we're sitting at, right? Like I keep telling this to private clients that if there was ever going to be a time, it's always hard to predict the future, but if there was ever going to be a moment where Bitcoin truly separated and carved out its own space as a global financial asset, this is the time. You can't really get a better setup than this on all level, where you've had all of this maturation, the infrastructure's in place, the political support's in place. There's enough quakes and trembling in the financial system that it makes sense to own something like this. And you have all of these massive companies coming to embrace it with billions of dollars in liquidity. If not now, when? And this is just, this is what I think investors, clients, just everyone needs to realize is I think this is one of just the most important moments for Bitcoin in its history. There've been many, but on the other side of this year, I think you could look back and I think where you could be is just in a completely different orientation to Bitcoin among financial capital broadly. I think we get there this year, next year. I really do think it's happening.
Well, I think people are realizing that, one of the most sure places to invest your money is on the counter trade against printing a fiat currency, because they tell you exactly what the plan is. And the plan is to keep devaluing that currency over time. So if you've got these governments that are really trying to maintain, what I'll call price stability, right? Because wages and things haven't kept up with the growth of supply. If you're trying to keep prices stable, you have to play with the supply. That's kind of the lever that you've got. You can work with incentives and lending in the credit markets as well, but the supply ultimately becomes that relief valve. So if you're looking for something that's going to be the exact counter trade to that, what do you want? You want completely inelastic supply. You want something that cannot adjust to demand. And the only thing in that cycle that can give is the price. So I think people are realizing that as long as you just believe that governments aren't going to pull it together and stop printing and devaluing their own currencies, then you want to hold the asset that holds the characteristics that make it the exact counter trade to that entire setup. And you can feel comfortable sitting on that because they're going to print.
Exactly. If you need evidence, just look back through the past 3,000 years of human history. It's inevitable. It happens. There are periods of time where, there's a money several hundred years at a time where money is really held stable. Gold, the denarius in Rome, for instance, in the Roman Empire, 300 years plus had the same amount of silver. And it was the standard for medium of exchange and savings throughout the empire and around the world, outside of the empire even. And then Nero starts coin clipping and sets Rome on fire, and that was the end of the denarius. And about 150 years later, Roman Empire dies.
Well, keep in mind that we've got it the best of anywhere in the world here in the United States because we do have the reserve currency. So it's really unique when a lot of this grassroots effort is happening from the citizens that are in the strongest economy in the world that has, I don't know someone's going to get a fire put out around the house.
New York City noise is all mute.
City never sleeps. So, if this is happening and this awareness is happening in the country that has the reserve currency, that is about as stable as it gets in this market, you can just look globally and realize that the rest of the world is going to figure this out at warp speed.
Yeah,
right? Because they're impacted by this even disproportionately to what we are. And even us sitting here in the US, we're not arrogant enough to say the US dollar can be the global reserve currency forever. We've got an entire history that proves that these things go in cycles and nobody stays on top forever. So, if you want to look reality in the face and come up with a plan to mitigate that and secure your future, even as the US government, you have to look at one of these true digital decentralized assets that really provides the only place to disrupt you. And you need to look at what your position is on that. And you can either embrace it early and mitigate your downfall and not take the position of arrogance and let yourself just dwindle in relevance in the global stage, or you can embrace it. You can be proactive and forward looking. You can find a way to integrate it into the national strategy, and you can protect yourself long into the future. So it's unavoidable that this becomes a conversation at the nation level. It already is. But it's also unavoidable that they're going to have to act on it. You cannot be so arrogant as to believe you're above disruption, because that doesn't exist. Nobody is above disruption. It comes for everybody.
Absolutely. I have a quick, this is a kind of monetary history fact that I think was always so interesting to me and doesn't get discussed enough. So if you'll give me a quick tangent here. But so in Europe, for example, in kind of the heyday of gold and silver currency, there was this interesting dynamic that would take place where new coins would be, so merchants would acquire like a physical gold or silver surplus, like the actual metal. And what would happen is there would be gold coins that had the king's seal on it. They were stamped. And these would trade at a slight premium to the raw value of the gold. There was kind of a political sort of premium there. So maybe they would.
It was a maybe trust premium almost, like.
Yeah. 100%. So let's say they traded at like a 5 to 10% premium over like the raw melt value of the gold. And so what would happen is merchants would bring in raw gold that they accrued doing business in other countries, and they would bring it to the royal mint. They would pay a small fee to the mint, and they would have it all stamped out into coinage. And this was economically profitable for them. They'd have more value. And what this created was the system where you had an inside option and an outside option. So as long as the system's going well and the king is behaving well and everything is right in the kingdom, you want to hold the political currency. You want to hold the kind of stamped version. But because of the nature of gold, you always had something called an outside option. So if the kingdom's descending into chaos and everything's bad, that premium would go away, perhaps even reverse. And then people actually take those coins, they melt them down, and they take the raw thing out. And why this is interesting is because for all of human history, there was the inside money and the outside money. And people always had the right to exit, in a sense. They could always take monetary value and exit the political system. Now, we haven't had that in the modern world. And that's how I think about Bitcoin existing at the same time as fiat, which it will do for a while. There's going to be a long period of coexistence. And I see Bitcoin as reintroducing the outside option, and that people in our economic system now have a legitimate ability to say, hey, I'm going to convert some of my, king's money into the outside money. And this provides a counterbalance. It provides something very useful to people. And that's really what I see Bitcoin bringing in like the next 10 years.
So you wouldn't call gold outside money?
It's too cumbersome. It's just
because it can't be used as besides sitting in a vault as savings, you can't use it otherwise.
Yeah, I think you really can't overestimate the profound innovation that was the utility in the ease of use and verification in Bitcoin. People talk about this all the time. It's not a new statement for me, but I really think it's just we live in such a digital and interconnected world, and it's just nigh impossible to use gold in that way at scale. But Bitcoin gets you around the use problems and also like liquidity problems. Like it's, you could buy the gold ETF with $10 billion, but, good luck trying to buy physical gold.
Yeah, that's not gold. That's still effectively dollars if it's not settled in gold, right?
Yeah.
And Brady, I would say my personal view is gold is outside money, but it's the outside money that had a chance to be, it was the foundation of the monetary system for a long time. Its fatal flaws were exposed. Like that already played out. There's a reason why it was removed as the base layer. There's a reason why it could be removed as the base layer. I have to show this. This is the Satoshi Papers by Natalie Smolinski. I'll read one thing about it. It's exactly what Stephen was talking about. I haven't really cracked into this yet, but the book is an open exchange of ideas among scholars about the relationship between money and state in a post-Bitcoin world. So it really gets into the topics that Stephen is bringing up. So I just wanted to share that. If you're interested in this whole like history of money from like an anthropological perspective, Natalie Smolinski, great person to follow. Her book, I'm excited to get into it. And I guess just one other point on the gold thing Stephen brought up. Even the quote unquote inside money that Stephen referenced, it was still very tied to gold, right? Like most of the time, the king would be saying this gold coin has this much gold or this much silver in it. Were there periods of time where they deviated from that? Mostly during wars and crisis periods. Yes, sure. But there was even the inside money had like a real world commodity link. the pure fiat system where the inside money truly is just this unit that the government says it's this many units, there's no link to it. That's only been a thing for 50 odd years. And I do find it interesting that the history of money has been this back and forth between more elastic forms of money during periods of war and crisis typically, but they don't last forever. There's a move back towards some sort of inelastic money. And obviously, I believe Bitcoin is going to be this major move towards it, not only an inelastic money, but a non-state money. So just some additional color to add to what Stephen was saying.
Absolutely. Love it, man. And I think there's a whole landscape. We'll put a pin in this because I think we got a lot to cover, but like there's a very interesting landscape there on just how the Bitcoin system coexists with what we've got now, because there's going to be a long transition period, even if you think it's going to that. It could be, you could spend hours on it.
This is why I think it's so easy if you make that shift in your mind and you go, if you just acknowledge Bitcoin as a commodity and it stays really non-threatening to the US dollar, right? Then it becomes very safe for other institutions and other nations to start talking about, because I think as a medium of exchange, because of the complexity of the rails that are already in place, the dollar's got a really long runway ahead of it.
Yeah.
Right? It may not serve as a reserve asset for as long. That I could see shifting over to Bitcoin. But I think as the unit of account for a while and as the medium of exchange, it's probably still got many decades in front of it. So it's not that these two things have to be completely at odds all the time. At some point, there's a natural evolution in the way people think about value and what they place value on. And I think because of all the recent events globally, people are starting to place that value on true decentralization. They want things that are just out of the control of these centralized organizations, and that's where they're going to park their value and store the value of their efforts, right, from their jobs. They're going to opt out of that system, but they're going to continue to transact within those confines that we have built out today. So, they don't have to be at odds yet, for sure. But in the value discussion, there's a clear winner here.
100%. Let's do it.
All right, let's get into MSTR then. It was a powerhouse 2 hours on the earnings call, investor call yesterday. It was like a 100-slide deck that Saylor went through, which was about an hour and a half of the presentation. And it was... they just keep getting more and more like fully formed in this vision that they have for these financial products on top of Bitcoin that they can provide to the world. And it feels like to me in this call, it really has crystallized into this kind of a new financial system of products on top of Bitcoin. And the vision is pretty compelling. So Ben is one of the internet's foremost experts on MicroStrategy and leveraged Bitcoin equities, or LBEs. So I'll hand it over to you, Ben, to kind of intro the section. I've got some slides. When
I think
ready.
First we just have to acknowledge what a big deal yesterday's earnings was. When you think about earnings releases from corporations, they're lucky to get 1,000 people to watch those. And you're seeing the impact of what happens when you spend the time to truly engage with the communities that are building behind you. I mean, 150,000 people watching an earnings report. And then when you take that a step further and you go, that earnings call was scheduled for 1 hour, and they threw that out the window, and you've got more than 100,000 people sitting there watching, digesting everything that he's saying. It just shows you the power of engagement. Because it matters, right? It shows that you have excitement around your business and it's something you truly believe in. And that's unique. We don't get a lot of that. Tesla got a lot of that from Elon because he was constantly innovating, pushing the envelope. He was keeping his investors engaged. But outside of that, it's very hard to find companies that seem to have a true core belief in what they're doing, where they want to be out there engaging and educating and teaching the world what they're doing in a very transparent way, and then pushing for what needs to come next. And I think he did a masterful job in that, because the internet comes alive every time you hear ATM, right? If that acronym comes out, the internet lights up. And he's done such a good service to the market to show why Bitcoin treasury companies are very different than all of these other capital burning entities that are out there. Most companies, if you see an ATM come out, you should be a little scared because usually it means they're plugging a hole in their operations somewhere. And that's not capital that's retained that can provide you future value. That's capital that's going to go into funding gaps in operations. Maybe it's plugging a hole in a merger that hasn't come together really well. They're going to go acquire, buildings that are going to add costs into whatever it is, right? They're using it to operate the business. These Bitcoin treasury companies, that's not what they're doing. They're capturing an asset dollar for dollar that lives on your balance sheet. And that's huge because that continues to perform well into the future, right? It's not a one-time event. And he was making that point throughout the entire discussion where he was saying, we don't think in terms of quarters here, right? We're not the company for you if you want us to go try to tweak and, eke out 3% better earnings this month. That's not what we're about. We are about decades long value creation. And we're going to be very strategic and very methodical about how we do this. And not only that, we're going to be a part of transforming the industry around it. So his push for the transparency and the credit was just masterful because that is the next evolution. It took him a really long time to get everybody comfortable with what it meant to capitalize a company around Bitcoin. And then when they opened up all of these other products, right, all these fixed income products, the convertible bonds, the preferred offerings, when he opened those up, that comes with an entire new learning curve. And the next evolution of that, beyond just how accretive those are to building that intrinsic value under your shares by increasing the Bitcoin per share for all your common stockholders, is showing that these are being issued by truly creditworthy organizations. They're massively over collateralized, and the risk premium that the market is putting on these is quite frankly absurd. Because when you're going out and you're borrowing money you already have, and you have no plans of getting rid of it, and you're over collateralized, 5, 6, 7, 8 times, that is a highly creditworthy organization that is truly institutional grade, and that should bring those spreads down. So I thought it was an absolutely masterful use of time and social capital by MicroStrategy, right? They take the time to put together, a 100-page deck or whatever it is to allow the retail investors to digest this strategy and what the next evolution comes like that unlocks a $300 trillion market. And then they give you everything you need for that retail community to become the megaphone for their corporate strategy and for their corporation. You're building an army of marketing.
Yeah.
It's amazing what they're doing.
So Ben, I want to drill down on something here for the listeners that I know you're aware of, but I think there's been controversy on the ATM, right? This has been like a hot button issue. It's all over Twitter. And I think, I think I know where you stand, but I really want to kind of drill down on this. Something I was kind of tweeting about yesterday and today. There's a lot of there's a lot of shareholders out there that think Saylor is responsible for the drop in the common stock share price over this last period because he just kept selling shares into it. Now, it's basically impossible to figure out exactly how much impact the ATM had, but my priors and my base case is that this really was a minority factor. I think the whole market pulled back. I think it had a parabolic run up. And I think his ATM sales were a tiny percentage of daily volume. Sure, if he hadn't sold it, maybe the share price would be a little bit higher. Also, maybe not because they'd own less Bitcoin. But could you answer that question specifically? What is your view on the ATM? As a shareholder, are you happy that he's going to keep tapping this ATM? I think I am, but I'd love to hear your answer.
Yeah, the ATM really doesn't bother me, but we can acknowledge that ATMs are inorganic selling pressure in the market, right? There's no way around that. If you look at the way companies operate and the trading that happens in the market, really, if the company is the one selling, that's a true source of inorganic trading. But the problem is when people look at these peaks, and particularly the blow-off peaks, and we had one of those back in November, right? Stocks don't go vertical like that forever. That's just not real. So of course he took the chance to arb that opportunity. Of course he did. Because he has a decade-long outlook and not a 2-day trading outlook that's going to, cater to derivatives traders. And that's where I think you get a lot of the noise, is when you have an equity like this that has this really high volatility and it makes these explosive moves, you get people that take short-term bets on that. And Saylor's been pretty clear that their operations are not meant to maximize the derivatives trading when you're putting time on your trades. They're maximizing long-term shareholder value here. And if you zoom out on the MicroStrategy chart, you can't argue with the success of that outcome, because that trend line is going up and to the right, and they are continuously building value underneath each of your shares. And the ATM is just one of those tools. And it's a tool that they can use quickly. But I think people take the assumption that every time the price pumps, they're just massively dumping shares. And that's not how ATMs work, right? ATMs are typically spread out over a long period of time, because the whole intent for how they execute an ATM is that they spread those shares out over a period of time as to not take up a big percentage of the trading volume. So it's typically going to be maybe 1% of the trading volume in a week that they might use on the ATM. If there's massive, massive volume trading on the stock, they might bump it up to 3. But when they're buying at a 2 times multiple to net asset value, every dollar they're collecting buys an asset that goes to the balance sheet, that lives on that balance sheet, and has the opportunity to build value in perpetuity with their strategy, right? They have no intention of selling any of this. So they're holding an asset that can continue to appreciate in value. So you want them to acquire that asset as often as they can if you're a shareholder, and it's going to build that base intrinsic value under your share. And over the long run, it's going to just continue to accrue value to you as a shareholder. So I don't view the ATM as a monster. And I don't think that the stock price starts going up and Saylor starts calling people going, sell 5 million shares. That's not how it works, right?
No.
So there's a little bit of a learning curve still around that. I do think he did a pretty good job at showing the value that can be generated using the ATM. But because it is an organic selling pressure, it's always going to have some level of an impact out there on a short term. And if you're a derivatives trader that has options expiring on a Friday, you're going to be a little upset if they use the ATM heavily that week. No way around it.
Absolutely. No, thank you for that, because it's been such a topic. There's a lot of, I think new investors, retail investors, that just think that every time the stock goes down, even on a day time frame, it's because it's Saylor hitting the ATM, and that's just not how it works. And one other thing, just on MicroStrategy, I think this is just an interesting point for people. There's a ton of people that complain about Saylor's entry prices, that he buys at what they would see as inopportune prices. But I think the thing they don't understand, contrary to you, Saylor's cost of capital is cheapest at the tops. At the tops, he is able to sell $3 of shares, $1 of shares for every $3, compared to $1 of shares for every $1.50. So actually, it's completely logical to him to buy the top. Any thoughts on that?
Well, look at the chart, right? They publish a chart of all of their buys. They don't just buy at the tops. They buy all the time, right? It just happens to be that during this cycle, when they really ramped up and they really scaled, Bitcoin's been on a trend up and to the right. So yeah, they're buying at the high periods. And that volatility, when you do get those major spikes in prices, that gives them access to those credit markets at really good terms, right? So when you look at that and you go, all right, say the MSTR price spikes and Bitcoin spiking along with it. If the difference between how they could have raised capital, a week prior, if they could have got a 35% premium on a convertible bond, but now because that implied volatility has spiked really high, the share price pumped, now they're getting a 55% premium to the spot price of the shares. That's massively more accretive. So it's not necessarily you're only going to buy the tops, but you're right. In those transactions, they get the best economics during these periods of massive volatility, and that typically comes during a price pump. But he's agnostic to those, because he has a view that Bitcoin's going to $13 million a coin. Yeah, so he doesn't care if he buys at 85 or 87. He's just going to continue to accumulate. And by the way, watch all the news. There's more people entering the market. So he's not alone in this market anymore. So there's a lot of demand that's coming. A lot of it's coming from corporates, and that means it's going to come from the institutions that they're serving with all the products. So he's got the advantage of scale. He's obviously the biggest player in the market, but because of that, he's got to go raise that capital when it's most opportune. But he has more weapons in his war chest now than he used to have. Now he's got the STRK offering that he's got an ATM against. He's got the STRF offering, which I'm sure they'll have an ATM against here in the not so distant future. So he's now got tools where he can raise during dips if he wants to, because those products are unique because they're essentially self-healing. If he hits the ATM on those and drives it down, the yields climb, you attract more investors, it pushes it back up to what the market prices those at. So now he has different tools than he had in the past. It used to only be ATM and convertible bonds, and now he's got more tools to play with. So he's got a lot of wiggle room to execute now.
Yeah. We should talk about strike and strife, and I'd like to hear you explain them. Since we were talking about the raise, I think we have, is this the right slide? Yeah. So this is the strike and strife. So yeah, you can see the MSTR, which is just the base equity, high on the volatility side, low on the seniority side, and then the converts, which we talked about and has been around for a couple of years now. These are the bonds that are issued, and the money is used to buy Bitcoin, and they convert into equity. And then there's these two are newer. The strife and strike are newer instruments, and would love to hear you explain how those work and why they're important.
Yeah, what he's basically doing is he's designing products for all these different pools of capital that want a different place in the capital structure. So they want a different risk profile on their investments and a different volatility profile. So, one thing that's not on here would be all the derivatives, and you would probably put those way off the chart on volatility because, if MSTR is levered Bitcoin exposure, these derivatives are MSTR, to the fifth power, right? They're highly volatile, which is why people love them. But what they're creating here is they're creating stable instruments that meet certain needs, and then they're creating more volatile instruments where you can create a different upside profile and downside risk profile for yourself. And he spent a long time talking about that with the converts because of the way that they trade as essentially high risk instruments where they're trading below their par value in a lot of instances. And so it creates these interesting opportunities for investors to tailor a portfolio that has long upside exposure with nearly no downside exposure because they're so over collateralized on all these instruments and they're trading below par. So you've got the par value on those bonds, which is what they're going to be at maturity if you just held on to them. So you have upside on that alone. But then they introduce these different ones, these STRF and these STRK, which have fixed income components, but they tailor to different audiences. Some of these buyers like endowments and pensions and insurance companies, they're not really looking for the convertible feature always. So that STRK offering tailors to the people who do want that opportunity and some exposure to the underlying equity. So because STRK is 1/10 of a common share of MSTR, right? You can look at the value that STRK is trading at, and you can essentially calculate what percentage of that holding is actually MSTR common stock if you looked at it. It's going to be whatever 1/10 of the current trading price of MSTR is. So you have long exposure to MSTR with that one, but you've got a liquidation preference price on that, which gives you some security. You're higher up the capital stack, so you'd get paid out before the MSTR common stockholders are, and you have a yield. So that one is a very appealing instrument to a pretty broad group of people, myself included. I like that instrument. Yeah,
Sounds
exactly.
good to me.
I mean, that one's really appealing. And then you've got people who don't care about the underlying equity at all, but what they want is to maximize their yields. They want stability and they want yield. And there's one thing that corporates can offer that Bitcoin natively can't. And those two qualities are duration and yield, right? If you think about it for a lot of these institutions and the way they have to structure their portfolios, they need to be able to blend in duration and yield to what they're holding. And strategy is really accomplishing that through STRF, STRK, and the convertible bonds. With the convertible bonds, you're putting a specific duration. So if they need to time match durations against liabilities, if you're an insurance company, those become very attractive because you've got the upside potential, of what Bitcoin does and what MSTR does relative to it. But you've got downside protection and yield that you can collect along the way. Same thing happens with STRF, except for that one is just a pure perpetual yield machine, right? You're not exposed to the MSTR equity. You're not worried about the volatility in the MSTR equity, but you've got a more than market yield than you're going to get on nearly any other product. I mean, a 10% fixed yield is pretty incredible in these markets today. And so that becomes highly attractive. And I think that's really where they see the most value being created, even for their common stockholders down the line, because you don't have a dilution event that comes with STRF, at least not a native one. You'll have some because they're going to have to fund the dividends, right? And, the piece that people don't ever like to talk about is how are they going to fund the dividends? Well, they're going to fund it using the common stock ATM. But the math that you're looking at is if they continue to drive value to the common stock, and he said very specifically that he's focused on increasing the value of MSTR. That is his guide. That's what he's trying to do. And when you have an increase in the value of MSTR, over time, it takes less and less shares to fund those obligations. So it becomes easier with less dilution over time as MSTR climbs in price. So when you're getting 100% of that capital today to go buy Bitcoin, and you get to spread those dividend payments out over decades and decades, that's a really powerful tool. So I think they want to scale those two up pretty quickly. People have been looking at the fixed income side of their capital raising plan and been getting a little disenchanted because they're seeing them move faster on the equity side than on the fixed income side. But the reality is there's a scaling period for STRK and STRF, right? They need to achieve a certain level of liquidity to keep dripping more shares out there where they can keep issuing those. So there's going to be a ramp period, but it's going to come. And I think that actually becomes their preferred instrument for raising the capital moving forward because of just how accretive it is to Bitcoin per share. They're really powerful.
It's amazing. So there's basically two more kind of pistons in this engine now. And do you see this system as sort of fully formed now? Do you see any other gaps or potential other instruments?
I don't think they're anywhere near done. And they alluded to it because they said that they were evaluating products for international markets. And they've still never done anything with warrants. And there's a lot of other levers that I think they can pull. But I think what they're focusing on at the moment is, one, they've proved out really large markets, really big pools of capital. And they've shown everybody that these are legitimate instruments. And now they need to show everyone that these are institutional grade investment instruments. And they're pushing for the ratings now. They're becoming a little more of an activist in that space. I mean, they always have been in terms of pushing the messaging. But now when they're actually doing call to actions for the investors to reach out to Moody's and Fitch and all these rating agencies and start pushing them to really give these a look, they understand just how powerful it would be to be able to get these fixed income instruments rated. And if you can get them rated AA or AAA, the amount of capital that arrives at your door willing to buy these instruments is incredible. So I don't think they're losing sight of the opportunity they already have just with the playbook they've got published out there. But they alluded to the fact that they're not done, and they're constantly looking at new products they can bring, new securities they can bring that are going to serve as many pools of capital as they possibly can.
Ben, have they talked about explicitly a desire or a plan to get securities rated, or is that more just a speculation at this point by the investor community?
No. That was a huge part of his presentation yesterday, was he was making the case for why these are institutional grade and why they should be able to get rated directly by these ratings agencies. So he had several slides in there that showed how they would compare against traditional rated credit out there in the market and why they should qualify for AA or AAA because of that over collateralization, right? They started talking about the Bitcoin ratio, which is essentially the Bitcoin divided by the debt obligations. You're showing just how over collateralized you are on all of these obligations. And it shows how low your probability of default would be. So he spent a significant amount of yesterday's call making the case to these rating agencies for how they should be evaluating these types of companies. Because I think this one is so perplexing to rating agencies because they have their frameworks they've been operating in for decades now. And this gives them an entirely different view. So yeah, this is absolutely one of his main focuses, because that is going to be one of those events where you say, rising tides lift all ships. Imagine the impact for every company that's a Bitcoin treasury company if you can issue these types of instruments and get them rated. That's massive.
Yep.
Massive.
Yep. Steven, I know you need to bounce for a client call, I assume.
Thank you, guys. It's been a pleasure. Ben, always a pleasure. Great time.
Absolutely. Thanks, Steven.
See ya.
You guys good to roll for a little bit longer?
Yeah. That last point, Brady, I could offer some, number one, I think it's super interesting, but I can offer some direct experience here. So my prior Wall Street career was largely as a fixed income portfolio manager. So fixed income, just the Wall Street fancy term for bonds. And for the most, I dealt with like investment grade rated bonds. They literally segment out the fixed income world by credit ratings. And I'm not by any means saying that the credit rating agencies are perfect or that anything they say, necessarily makes sense. In fact, they famously, during the financial crisis, had a bunch of housing related debt instruments, tons of subprime mortgages in there. They had it rated AAA, made it seem like this stuff could never default. Turned out that was far from the case. But it's just a fact that there are huge pools of institutional capital that have investor mandates that require that anything they purchase has to be rated. I'm talking literally trillions of dollars that they're not, they might have some leeway to say, hey, with this tiny sleeve of what we invest in, we can do these unrated private securities, things like that. But they're always going to keep it tiny. If you're talking about the pie chart of their investments, they want most of it to be rated by these rating agencies. So that would be a huge unlock for those pools of capital. And then another thing that I think will be really interesting to watch, Ben kind of alluded to this, is how the rating agencies discuss this and analyze it themselves, because they have different segments and industries within the rating agencies. Like there'll be a guy who we're talking S&P, Moody's, and Fitch for the most part. They'll have someone who works there that is the expert on a particular sector, a particular industry. They, as far as I know, they don't have a Bitcoin, expert, but they may need to do that in the future. And they'll write reports on, here's the outlook for the housing sector. Just as a whole. They have economists that work at these companies, and they'll say, here's the outlook for the housing sector. Here's why we think the housing sector as a whole is roughly rated here. Here's views on these individual names that issue debt in the housing sector, all this stuff. We may be headed to a world where they have to do the same thing for the Bitcoin companies. So I just wanted to throw that all out there. I think it's coming. It's debatable how quickly that's coming. But kind of related to all this, Ben, I would love to get your thoughts on the analogy between real estate investors, people who borrow to acquire real estate. How good of an analogy do you think that is for what Saylor's ultimately doing, borrowing to buy Bitcoin? Do you think it goes pretty far? Do you think it breaks down at a particular place? We would love to hear your thoughts.
Well, I think it breaks down at the start, quite frankly. I mean, it makes sense to a lot of people. It's a good analogy for people to start to understand, right, what it means to borrow money to buy an asset that should appreciate in value, right? But to me, that's kind of where it stops, because there's fundamental differences between Bitcoin and real estate. And one of those is immense carrying costs and management that you have to put into them, right? You don't have any of that with Bitcoin. You don't have tenants that are destroying your properties that you have to rebuild. You don't have roofs you have to replace every 25 years. There's a lot of differences in terms of the carrying costs of this. Real estate had been a really good investment for a very long time because the access to capital there was huge. It was one of the best ways to get money out into the environment. They expanded and made credit really easy for real estate for a very long time. And when they incentivize you in that way, that's where the capital's naturally going to flow. If you can go get really low cost of debt to go buy one specific asset, that's probably what you're going to do, because it's what they're incentivizing you to do. but it's not nearly as clean of a transaction as something like Bitcoin, because you do have all those headaches with managing it. It's not liquid to you all the time. You have to refinance it constantly to pull your money and the value out of those investments. And so I think fundamentally, Bitcoin just provides a significantly better value proposition, both from an expected growth and I think from a risk-adjusted perspective, because you do have risk with real estate, right? Ask anyone who goes and builds up a real estate portfolio around a college town, how resilient that real estate is. Not very. You get a couple frat parties thrown in your house and all of a sudden you've got, $20,000, $30,000 of repair bills. It can erode that value really quickly over time. Bitcoin provides a fundamentally different value case, I think, than real estate. But as an introductory conversation to help people conceptualize what he's doing, I think it was a good one to start with, because I think it was so common. And there were so many people already pounding the pavement around, building these income generating, investment opportunities and investing in the appreciation of real estate, because real estate always goes up. And well, real estate always goes up because, the money supply is always going to go up, and they're making it really easy to access the credit. And now you're starting to see some cracks in that in the market, because for a long time, they made it too easy to get that. And now it's pricing people out of that market. And now people are starting to question whether that trend can continue or whether there's going to have to be some massive correction that happens. So it's a good analogy, but I just think that fundamentally, once you own the asset, they're very different cases.
I wanted to bring this up real quick because we were just talking about this. So going back to and I think this was an extremely important part of the presentation, and we were just talking about credit risk and risk credit agencies rating these things, and you can see investment grade is less than 1% risk, and junk grades are above that. And you can see everything here. And maybe Ben, you can talk a little bit more about the BTC rating and what this means. Basically, this is showing a collateralization chart across different volatility ranges and showing that, hey, like we're not really.
Yeah, that's
we are
exactly it. I
investment
mean, the
grade.
BTC rating is just the multiple of coverage you have against your liabilities. And so I think he's actually, if you scroll down, I think there's another one in here that gives a pretty good visual. Let's see, where is it? Yeah. There's so many slides in the deck. But yeah, I mean, here you can see what the growth, what the annual or the CAGR would need to be on Bitcoin and when they become investment grade based on your assumptions for the growth of Bitcoin over time, right? So the only time that some of the instruments that Strategy has issued wouldn't be considered investment grade is if you assume there's going to be 0% annual growth rate on Bitcoin, right? If you build in an assumption for nearly anything above that,
And how many years would that have to happen? It couldn't be one single year. I mean, because Bitcoin could be down
exactly
20 or 30%.
And I think when he was looking at this, for most of this presentation, he's looking over a period of 10 years when he's looking at a lot of this and how he's doing his analysis. But I just think that this was a really powerful chart that shows, you don't even have to have really high flying expectations for how Bitcoin's going to perform over the next decade to realize that these instruments, particularly with the type of over collateralization that MicroStrategy or Strategy has, how easy it would be for these to qualify as investment grade. But right now, those credit spreads that they're getting on these are treating them like everything's a junk bond, right, today. So it's a worthwhile push that he's making right now, and him trying to mobilize the retail community to start pushing on these rating agencies to take a really deep look at all of these types of instruments and show that Bitcoin treasury companies are some of the most sound companies that are trading in the market today. That's going to make a massive difference in unlocking $300 trillion to flow into Bitcoin. Not that all of the $300 trillion, but the size of that bargain. Saylor's famously said he wants 1% of that, right? Well, $3 trillion is a lot of money coming into Bitcoin.
It's pretty good. Let's talk a second about the plan. So this was announced as well. The 2121 plan has been out there. It seems like it's, I mean, how far along are they on that? The initial plan, it was going to be for like 3 or 4 years. I don't know. I'll let you explain it, but now they basically doubled down.
So This is what ruffled some people. Was initially when they came out, one, I think they surprised themselves with how fast they were able to move on that plan. It was initially slated as a 3-year plan, and it was 21 billion equity, 21 billion of fixed income. And they're essentially through the equity. They've got like $100 million left on the other ATM. So now they've opened another $21 billion ATM. So now they're going to have $42 billion in total for the equity portion of the plan, and then $42 billion that's planned for the issuance of fixed income. And you can see right there where they're planning to get a lot of that, which was to my point earlier, says 21 billion ATM strike. So they're planning to use that strike offering in the ATM that they have open on that strike offering to fill a significant amount of that fixed income piece. And right now, strike isn't a massive product, right? I think it's 700 million, 800 million, something like that. Yeah, I think they're showing 700 million in here. But so they've got a long way to go to scale this up. But now that people have found that it's this much more stable instrument where you've got upside exposure to the explosive growth of MicroStrategy and Bitcoin, I think it's like the perfect entry point product for people that want to wade into this ecosystem. If you're not ready for the high voltage of the pure equity and how much that's going to move, but you want to be directionally long, but you don't want to see your portfolio fluctuate like crazy, STRK is kind of perfect, right? You've got a convertibility feature to it, so you get long exposure to the equity, but you've also got a fixed income component that's going to pay you $8 a share every year. And so you get a stability component with a growth component, and it lets you get into this ecosystem while you learn about everything else that's going on in the value proposition of each individual product that they offer. So I think it's going to be very, very popular because of that exposure to the MSTR equity on its own, I think it gives a higher value proposition, a higher return possibility than a lot of other equities out there with downside protection. Right? You've got a high liquidation preference. You're higher up in the capital structure. It's one of those really safe investments to get into if you're an investor just wading into the space who's not ready to watch their portfolio fluctuate 50% at a time.
Yeah.
I will.
What else, guys?
No, yeah,
John,
I'm probably
I know
going
you
to
got
wrap it
questions.
up soon, but I will just say I'm amazed at how official and it's always mind blowing to me. And I think yesterday was a really big moment in time of just like how official, I was going to use the word financialized. That probably is not as welcome of a word for some of the people who have been in Bitcoin for a while. I'm in the camp that this kind of thing was inevitable. Yes, Sailor and MicroStrategy are kind of blazing the path, but the kind of financialization they're using, the merging of traditional financial worlds, my old career in fixed income portfolio management kind of getting merged with Bitcoin, kind of stuff I never really thought would happen. Ben pointing out that 150,000 people listened to this earnings call. MicroStrategy's market cap is now in the neighborhood of 100 billion again. In August of 2020, if my memory is correct, it was around 1 billion. So you're literally talking about 100x in 5 years, 4.5 years. Just really mind-blowing stuff that I think a traditional investor has to be paying attention to some extent now. So I just wanted to step back and make that kind of high-level comment. But as Ben said, and Brady, I loved your question about, do you think there's any more pistons in the engine, any more arrows in their quiver that they're going to come out with? And Ben gave a very resounding, they have a lot more that they're going to do. And that's why this earnings call went 2 hours yesterday. They outlined some of that stuff. So I think we're just like scratching the surface at this, maybe I should say Bitcoin securitization rather than financialization, this era of Bitcoin securitization. I'll just make one last comment. I understand how some people don't love that, kind of the more purists in Bitcoin, because to a certain extent, some of this is financial engineering. But as long as the world we live in is a world where you have this dollar system and it's going to be around for a good amount of time, which is my belief, I think it's all of our beliefs here, that the dollar system is not going anywhere anytime soon, there is this massive opportunity to tap the debt and equity capital markets and accumulate Bitcoin. That's just the nature of the system. So I get it. There's some people that just want to, you know, focus on holding Bitcoin, self-sovereignty and all that stuff. And all of that is great. But this opportunity is here and there's going to be people capitalizing on it. And MSTR is blazing the path.
This is how you transition from one monetary system to another. So you've got to have instruments that live in the traditional financial system that bridge over into the Bitcoin system, and that's what's happening.
Well, you can think of this as the evolution of Bitcoin is for everyone, right? Sometimes they just need it in a different form, and corporations can provide that form to them, but they're thriving off the unique characteristics that Bitcoin holds as an asset. So it really does expand that and make it truly for everyone, individuals, corporations, nations, right? It's the beauty of what happens when someone creates something as impactful as Bitcoin and then just releases it to the world. You give up your control and the world gets to decide what to do with it. And luckily, what the world's deciding to do with it is make sure that that value gets driven into every part of society, no matter what tier you're playing in. If you're a nation, you're a company, you're an individual, it has a use for you. So Bitcoin truly is for everyone.
All right, mic drop moment. We'll wrap it up right there. Thanks, Ben. Appreciate it. Thanks, everyone, for joining us. We do this every Friday. I saw that there were some new folks joining us in the chat today. Here to see Ben. That's awesome. Ben is now Chief Investment Officer at Swan, so he is officially on the Swan Squad, which is extremely exciting for all of us. So you'll see him here on Swan Signal Live from time to time, and you can find him also on his other show called The Hurdle Rate. You want to tell us a little bit about it?
So we've got a few. We've got the MSTR True North, which I've seen a lot of people in the chat that came over from that, where we talk about, you know, leverage Bitcoin equities strategy and all the changes that are happening in the market and really trying to help retail investors make sense of all these changes because it's complex. And then I've got a podcast called The Hurdle Rate with Matt Cole from Strive Funds and then Jeff Walton and Tim Kotzman from MSTR True North. And on that one, we tend to slant a little more towards the macro. But the entire thesis of that show is around Bitcoin being the hurdle rate, both for your personal life as well as for corporations who are investing in any type of products. You know, Bitcoin's become the new hurdle rate for the world. And anything you evaluate, if it can't beat Bitcoin, you should be buying Bitcoin.
Awesome. So check out the hurdle rate and check out MSTR True North. Welcome, Ben, to the Swan team. CIO, very exciting times ahead for Swan and for Bitcoin. Catch us again next Friday, 11 a.m. PT, 2 p.m. ET, and we will cover the week's news and see what we'll get into. There's always a lot to talk about every single week in Bitcoin. Thank you again to BTC in DC. It is going to be a fantastic event, really unique among Bitcoin conferences as it's held in the nation's capital in a period of time where Bitcoin is being welcomed into the nation's capital much more than it ever has been in the past. So it's a really critical time for people to get together to try to help inform policy around Bitcoin in the nation's capital. That will be this fall at the Kennedy Center in DC. Swan is a general partner, so we're really excited to be a part of making that happen. And also thanks to Mara for securing the Bitcoin network